Brace yourselves as we delve into the seismic news surrounding the passing of none other than Charlie Munger, the dynamic vice chairman of Berkshire Hathaway. At the ripe age of nearly 100, Munger, a stalwart in the financial arena, leaves an indelible mark on Berkshire's legacy and the investing world. This isn't just a loss for Berkshire Hathaway, it's a blow resonating through the 60-plus years of partnership Munger shared with the legendary chairman and CEO, Warren Buffett. But fear not, financial enthusiasts, for even in the face of this transition, the economic juggernaut that is Berkshire Hathaway remains standing tall. Picture this. A decade ago, our keen research foresaw the inevitable departure of these financial titans. We declared then that Berkshire had laid the groundwork for a seamless transition when Charlie Munger and Warren Buffett pass away. The secret here is the strategic capital allocation into companies capable of absorbing the vast cash flow generated by Berkshire's diverse operations. Buffett's magic touch wasn't just about growing capital, it was about curating a culture and fit when assimilating new ventures. Fast forward to today, and we're witnessing the evolution of Berkshire from a reinvestment powerhouse to a capital return-focused giant. The baton is ready to be passed, and we firmly believe that the Berkshire culture of autonomy and entrepreneurship is deeply ingrained, which transcends any single leader or the duo which is Munger and Buffett. Sure, we acknowledge the irreplaceable void left by the departure of Munger and eventually Buffett. The synergy between these two financial wizards has been unparalleled. But investors should know that I have always touted Berkshire as the epitome of a decentralized conglomerate. A capital allocation maestro with minimal shareholder costs which can survive virtually any storm. The show will go on with the next set of managers steering the ship. As long as the efficient operating structure remains untouched, Berkshire's decentralized approach ensures that focus on portfolio stewardship and capital allocation will persist. So, in the grand financial opera that is Berkshire Hathaway, the finale of Buffett and Munger's act may be upon us, but the symphony will endure. Charlie Munger, the esteemed right hand to Warren Buffett for an impressive 6 decades, wasn't just a sidekick. He was a savvy investment maestro in his own right. Munger's legacy lies not just in Berkshire Hathaway's success, but in the timeless investing wisdom he generously gave to the next generation of investors. While Buffett honed his skills under the tutelage of Benjamin Graham, Munger elevated the game by expanding Buffett's focus from cheap stocks to quality companies. Under Munger's influence, Berkshire transformed into a diversified conglomerate, spanning insurance, railroads, and consumer goods. A shining example of Munger's impact was the acquisition of See's Candies in 1972, a move that stretched Buffett's comfort zone in terms of price. Munger wasn't one for the conventional diversification gospel. He deemed it insane to spread investments too thin. Instead, he championed the concentration of resources in one's best ideas, rejecting the notion that a vast array of opportunities could easily be identified. Much like Buffett's circle of competence, Munger emphasized focusing on areas within one's expertise. Knowing the limits of one's intelligence was, according to Munger, a crucial aspect of practical wisdom. Brands and customer loyalty were Munger's secret weapons. He believes that Costco is one of his best investments, highlighting the importance of buying quality companies that will be around for generations to come. Waiting, for Munger, was an art form in investing. The big money, he believed, lay not in the buying and selling, but in the patient anticipation of the right moment. Cryptocurrencies were another realm where Munger took a firm stand. He dismissed them as a malicious combination of fraud and delusion. His views on Bitcoin were blunt, calling it a turd, worthless, artificial gold, and dismissing trading digital tokens as just dementia. Munger's skepticism extended to commission-free trading apps, criticizing their role in facilitating momentum-driven trading by amateur investors during events like the meme stock mania in 2021. In the world of Munger, wisdom wasn't just about making moves. It was about waiting for the opportune moment, focusing on what you know and steering clear of financial fads. His words now stand as a beacon for investors who are navigating the ever-changing seas of the market. Warren Buffett, the Oracle of Omaha himself, acknowledges that the monumental success of Berkshire Hathaway is intricately woven with the brilliance, wisdom, and active involvement of his longtime partner, Charlie Munger. But Munger's contributions extend far beyond the realms of conglomerate management. They form the bedrock of principles that should resonate with anyone seeking to fortify their financial standing. So let's dive into 5 key investment principles that propelled Munger to a personal fortune of $2.4 billion while steering Berkshire Hathaway's stock to a staggering 4,000% increase during his legendary tenure. Number 1. Munger's sage advice is to discern your own aptitudes and play where you have an edge. Competing in arenas where others have the advantage is a surefire path to loss. Stay within your circle of competence by focusing on industries and companies that you genuinely understand. Number 2. Munger's mantra is, "Show me the incentive, and I will show you the outcome." Recognizing and comprehending incentives is a cornerstone of sound investment decisions. A flawed incentive system begets suboptimal results, and understanding this dynamic is key to navigating the complex world of investments. Number 3. Embracing the value investing theory of a margin of safety, Munger opted for securities trading well below their intrinsic value. Like a sturdy bridge built to carry more than its expected load, investing should provide a cushion for unforeseen losses. Safety, in Munger's world, is not just a priority, it's a necessity. Number 4. Munger, in alignment with Buffett, championed investment in companies with a competitive moat. These are businesses fortified with protective layers that shield them from rivals. The value of such companies, with advantages like Apple's ecosystem tying hardware to recurring revenues, is not just substantial, it's enduring. And number 5, an often underestimated principle, which is that compound interest is the quiet force that fueled Munger's financial success. Reinvesting gains from solid, competitive, and predictable companies over the long term yields exponential growth. Munger's wisdom encourages us to incrementally grow wiser, discharge duties faithfully, and build discipline to weather the long game of financial growth. Munger's principles aren't just for the elite few. They form a blueprint accessible to anyone aspiring to financial prosperity. In the intricate dance of investments, Munger's footprints are an invaluable guide for those who dare to follow. Charlie Munger's legacy extends far beyond the walls of Berkshire Hathaway. His teachings provide a compass for those navigating the complex seas of finance. Munger's principles, from the importance of staying within one circle of competence to the enduring power of compound interest, form a roadmap accessible to anyone seeking financial prosperity. In a world where markets fluctuate and economic landscapes evolve, the wisdom of Munger stands as a timeless guide for those aspiring to navigate the financial journey with prudence, patience, and profound insight. For more videos on the best investing tips and tricks, remember to press the like button and subscribe. With that being said, I wish you the best of luck and happy investing.